Good afternoon and welcome to the sixth Eatonbridge webinar of 2022. Great to see so many friendly faces from our network and also those new to our network. Thank you very much for joining us. My name is Louise Chaplin and I head up the board practice at Eatonbridge Partners. And I'm delighted to be joined this afternoon by Vanda Murray, Rob Woodward and Louis Cooper. Before we get going on the discussion of the future of ESG, regulation, risk and reward within a particularly challenging economic environment, I'd like to give a brief overview of and market insight from a Eatonbridge perspective. For those of you who don't know, we are a search, interim and consulting practice operating out of offices in London and Windsor. We support clients across the breadth of corporate leadership and ownership structures. So we're delighted to support clients from a FTSE, private equity and privately owned perspective, but also supporting across verticals and sectors. Starting with the UK and domestically, we've seen a really steady increase in C-suite hires over this year and going into next year. And that there's no been any particular one sector that I would say is a spike in activity. I would say that finance leadership and HR leadership has been particularly strong at Eatonbridge. And also post-pandemic, and I suppose a number of board positions being held during the pandemic, there's been an increase in activity in AIM-listed environment from a board perspective. We continue to support our clients in Europe with a number of mandates in Spain, France, Germany and Scandinavia more prominently now. And moving further afield, we certainly saw during the pandemic there was a certain movement of C-suite out of the Middle East and out of Asia Pac. And that has now come round, and we are now looking at doing a number of hires with our clients and a well-known network, both in the UAE and broader in the Middle East. And certainly looking at Singapore, we're seeing huge amounts of activity, particularly with the fallout of Hong Kong being less of a hub and Singapore now opening up its borders from a visa perspective. So moving on to the discussion of the day. And firstly, thank you very much for completing the poll questions prior to joining today. And I'd be delighted to welcome Vanda, firstly, to the room. Lovely to see you again, Vanda. Thank you for joining us.
It's an absolute pleasure, and I'm really delighted to be here again. Got a great discussion this afternoon. So very briefly on my background, I was previously a chief executive of a quoted company here in the UK. And then more recently, I've moved into chairing and non-executive positions. I currently chair Yorkshire Water and Marshalls, which is a FTSE 250 building and landscaping manufacturing business. So I've been interested in ESG or sustainability since the 1990s, when John Ellington came out with his very famous triple bottom line on people, profit and planet. And we've seen the rise in ESG investing over the last 20 years. ESG rating agencies and models, and ESG becoming part of the investment decision process. And we'll talk later on about how that gets embedded into organisations. Next year, we're going to see the new standards board come into practice, the ISSB, the Sustainable Standards Board, which should help with framework and reduce greenwashing. Interesting to note that the CMA looking into a few quoted companies, including I think ASOS, Boohoo and Georgia Asda because of greenwashing. So there is some hard line on what we all have to deliver and the belief in the metrics that we put forward. One final point from me, we can't ignore the current turmoil in the financial markets, and it doesn't make it any easier to keep ESG at the top of the board agenda. It makes investment in that even harder, but I think it's incumbent on all of us to make sure that we do the right things, embed ESG to a point where it becomes not just a competitive advantage, not just the way we do things, but just absolutely part of our DNA. And I look forward to having that discussion with everyone later.
Thank you, Vanda. Rob, thank you again for joining us this year on the ESG webinar. It'd be great to hear a little bit of your background.
Very good. Thank you, Louise, and hello, everybody. And like Vander, it's great to be here again and to continue this important discussion. So just a couple of words on my own background. So like Vander, I was a PLC chief executive for a good number of years. And then 4 years ago, I've transitioned into a portfolio existence of, and I chair two public companies. One is called Blanco, which is a global software business, which is listed in London, but run out of the west coast of the US. And the other is a marketing services business, which is called Ubiquity, which is a global business based in London, but with representation in all the major territories around the world. I also, for the UK government, I chair the Met Office. So, and I'm also on the board of a satellite business, which the UK government has invested £500 million into, which is called OneWeb. So I would like to kind of this afternoon kind of draw out the kind of slightly contrasting experiences of where ESG sits on the agenda in those organizations kind of under different ownership structure and different regulatory structures. But I've been passionate about the topic for a long time, and I have absolutely believed that, well, I thought we were actually making fantastic progress. But like Vander, I do have a particular concern on the impact of the current kind of global economic crisis. And I think a lot of the good progress, good work that we've all undertaken in making sure that the ESG agenda became a kind of a must-have agenda item as opposed to a nice-to-have agenda item, I do see that it is coming under pressure. And I also see that there's I would say an increasing kind of difference between different geographies. And in particular, I point out a difference between kind of Europe and European-based attitudes, which are much more sympathetic to kind of having a strong ESG agenda to those that I'm seeing in North America. But very much looking forward to the discussion. Thank you.
Thank you, Rob. And finally, Louis, delighted to welcome you back. And Louis is the CEO of the Non-Executive Directors Association we have a strong partnership with.
Thank you, Louise. Just to introduce myself, so I'm Louis Cooper, I'm the CEO of the Non-Executive Directors Association, NEDA. We are a members association that look after the interests of NEDs. My own personal background, I've come up through an accounting route, but I've also sat on 3 boards, listed and AIM boards, so bring that sort of board experience into play as well. As an association for NEDs, we help NEDs from cradle to grave throughout their career life cycle, including training and educating, advising, supporting, knowledge transfer, networking, coaching, mentoring, and other broader range of board-related services. And as Louise has said, we've been really privileged, I think, to work with Eatonbridge over these years in terms of seeing Eatonbridge as our trusted partner in terms of board recruitment services. We're not a board recruiter, so we don't compete with Louise. We very much complement all the work that Louise and the team do. Our key focus areas are very much around widening the pool and getting more people into the NED community, looking at diversity and inclusion, knowing your role in particular between that transition from ED to NED, and also managing your own personal risk in terms of the risk that you take on in terms of board roles. From an ESG perspective, we have been running over the last couple of years a program of training around ESG, particularly looking at the risks and opportunities. And we have a program with the Institute of Chartered Accountants and also Euronext in Europe in terms of looking at the broader context of how international companies are picking up this area. And we've also incorporated more of this information into our NED handbook, which we're just about to release our 6th edition. So we see ESG as a very much key area. obviously a hot topic for a lot of boards. I think a lot of people, though, are still struggling with the methodology and what are you actually talking about in terms of ESG, because they're three quite different areas. They involve three probably different teams and different groups of people across the organization. I think a lot of people are still using ESG just to think about E rather than the S and the G elements. So it'll be interesting through the conversation today to see how that thinking is working. I think the last session we highlighted for C's around EDI, and I wanted to pick up on the 5 R's in terms of ESG. I think the key elements are responsibility, both individually and also collectively as a board. So you need to take a real review of your responsibility, what you're taking on in terms of this area in particular. You need to have the right resources. So you need to have both internal and probably external support in terms of the resources that you have available to navigate your way through this area. It is very much a risk area, so you do need to balance the threats, and people tend to think about the negative, but you also need to think through the opportunities that you can grasp in this area, because if you can do that, that can give you perhaps some competitive advantage. There's a heavy emphasis on reporting. So that's why I think we looked at the regulation elements in terms of the headline for the session. So there's a lot of reporting requirements. We'll perhaps pick up on that later on. And the last R, I think, is the race against time. I think we're all looking at a timeline now. And, a lot of the commentary is that we're running out of time and we really need to get our act together. And I think from a company, a corporate perspective or an organization perspective, it is very much looking at the plans that you've got in place and how you can make those plans come to fruition and make sure that the actions are actually being followed through, not just from the reporting side, but also from the behavioural side in terms of what's going on within the culture of the organisation. So that's my introduction, and I'll pass back to Louise.
Louis, thank you. And I think that leads us very nicely on to just reviewing the poll questions that you answered on joining. And I think looking at the first one, where does the ownership of ESG sit? And I know that this has evolved over the last few years, and certainly from a FTSE perspective, there are a number now of sub-boards and advisory boards that sit below the board supporting the boardroom. But so looking at our population here and the answers, the board, where does the ownership of ESG sit? So boardroom was 47%, senior leadership team 15%, 13% executive team, and 25% in a combination of all, which actually is quite an interesting statistic, the combination statistic. Vanda, it'd be great to get, within FTSE 100 and the challenges you've got with global organizations and multiple facets of data, great to get your insight in terms of the ownership and how you manage that.
My view is very clear. It has to be led by the senior leadership team. It has to have either a standing item on the agenda or be part of the either the CEO's report or an individual committee report. So I also serve as senior independent on a FTSE 50 called Bunzl, which is an international distribution business, and we've recently set up an ESG committee. It is a full committee, so it reports to the board alongside audit and remuneration. So 2 more points. The CEO always picks up in his report what's been happening during that period under review on ESG and how ESG is driving not just the way the company thinks and operates, but driving its the way it's thinking and working and its offer to customers, so its competitive advantage, so that we embed it further and further. That said, and again, picking up my colleagues' comments, there is an enormous amount of work to do in each of the pillars of ESG. So there has to be either an advisory group that sits below board or a committee where all the people doing that work come together and holistically make sure they're working together, that the actions that they're taking are supporting each other and that it's supporting the longer term goals of the organisation. Because there are some things within ESG that are statutory now, think modern slavery report, or reporting on a whole range of TCFD issues. There are some things that are mandatory and some things that you just want to do because it drives your strategy forward. But all that has to come together. And then again, we have to submit information that we can stand behind, that's evidence-based, to the rating agencies, because we're all going to be rated. And sadly, at the moment, the requirements are all slightly different. So that in itself is quite a lot of work. So you do need a group of people overseeing that and delivering information, data that we can rely on as an organisation, that comes to the board, that's used to drive strategy and decision making, but also is believed in and understood by our stakeholders, by our customers, our suppliers, and that we can use it to drive the business forward. And there are many, many examples I could give you of how it is driving competitive advantage, because our suppliers and our customers also want to know we're doing the right things, and in some cases need help. So I believe that if you embed it in the organisation, it isn't just lip service, it isn't just greenwashing. Truly get it at the heart of your organisation, lead it from the front. The CEO and the senior leadership team has to be a direct line of sight all the way through the organisation, that people believe we're doing this for all the right reasons and it's going to drive growth. So there you are, lead from the front, but make sure you've got the data behind it.
Brilliant, thank you, Vanda. And Rob, your insight, and just keen just to highlight the second question as well, in terms of how often is ESG discussed. Now, interestingly, based on Vanda's response, ad hoc 52%, every other board meeting 11%, and every board meeting 37%. So it's obviously not consistent across boardrooms, and I would imagine it changes within ownership structure, whether you're listed, whether you're private equity. But Rob, balancing the two, obviously you've got public sector, government organisations, private equity, and listed. It'd be great to hear your insight.
Okay, thank you. Just actually, just picking up on the first point as well. I was actually quite surprised at the low percentage of senior leadership team ownership, because I'm sorry to be boring, but I totally agree with where Vanda comes from, because this topic needs to be owned by the executive. It can't be imposed by the board. The executive need to own it and lead it and lead by example. So I just thought I would pick that up. In terms of kind of frequency of discussion, in my mind, it's kind of horses for courses. So we don't have it on any of my boards. We don't have it as a discussion point baked in for every meeting. And I think that it will work out that I would say the majority of meetings ESG will be discussed, but I prefer to kind of put it on the agenda when there is something meaningful to say, as opposed to it becoming some form of kind of tick box kind of compliance approach, which I don't believe in. I also think I'd add an additional dimension to what hasn't yet been surfaced, but I would say in all the organizations I'm involved in, I think I put quite a high emphasis, and the chief executives put a high emphasis on the role of staff in is essentially kind of holding the organization to account. So once, I think I'd say you have to be careful with what you wish for, because once you kind of open this particular Pandora's box, then and involve the staff in a really meaningful way, then you'll find that, well, my experience is that they really do drive the agenda hard, and they kind of set particular high expectations of organizations. But it's amazing, when you're recruiting, and I can think it doesn't matter whether it's the Met Office or whether it's into Blanco as a PLC, the kind of interviewees are often kind of more than curious in terms of kind of what companies' commitments are to ESG, and I think that's really healthy. So I would say you kind of need to preempt that and make sure that you do have ensure that there are forums that are kind of run by representative groups of staff, who then from time to time kind of report into the board. And certainly I would tend to kind of hold kind of regular ad hoc sessions with with such groups. And I think actually, interestingly, the kind of the advent of us being able to operate in a virtual world has kind of really facilitated that. So we can have representations from employees kind of all around the globe, and that works really well. And I think it kind of sends the right message both to the executive and to the board. Thanks.
Thank you, Rob. And Louis, moving on to you, and just with the final poll question to include in your narrative in terms of the effects of ESG. And interestingly, and not really surprisingly, you know, an increase in 51% said an increase in performance. 6% said decrease. Now, it'd be interesting to explore that in terms of whether that is around reporting and manpower to manage that data. And a significant percentage said none seen. It'd be good just to get your view and also around the board, from a boardroom perspective, you know, the ownership and where it sits from your insight.
I'd agree very much with what's been said before, actually, in terms of the ownership. I think it's interesting. We asked this question when we did a similar session last year, and I think there was a heavy emphasis on the board, and this sort of combination of the three may be coming through because people are a bit concerned about how it's being picked up. But I agree with what's been said before, because I think day-to-day prime responsibility must be within the organisation itself. I think probably the ultimate ownership and responsibility obviously is at board level, but that's where I think Anna was talking about setting up ESG committees and having the ability to look at this area in a bit more detail and then feed that through to the board has been something that we've been seeing. And a number of our members have said, I've taken on this role and I'm a bit concerned that there's no sort of benchmark to work against, because it's quite a new committee and it's charting sort of new territory. But I think it's also, from the discussion point of view, it's often picked up across a number of different areas. When we look at board meetings, and we do explore that through some of the training and the discussions that we engage in. Quite often there's a standing agenda item which will pick up strategy, will pick up risk, will pick up people, will pick up performance. So within each of those areas, there is an ESG sort of element that could flow through that. So rather than having ESG on the agenda, if you've got that strategy, risk, people, performance focus, then you will be actually covering these areas automatically. So I think it's interesting just seeing how that discussion process actually works as well. And also, I think with the committees, some people have already had the benefit of setting up a sustainability committee, which obviously will pick up on the E side. And I've heard some people talking more recently about setting up more of a people committee, which would cover both remuneration and picking up on the appointment of new directors through the nominations committee. So again, I think people are taking the opportunity just to rethink where do we need support, how can we best get that support flowing through to the board in terms of these subcommittees. It's good that I think people are exploring that to see what would be the best fit within the organisation. On the last point, in terms of the effects of ESG, I think some of this may be to do with timing. I think we're still at a fairly early stage in terms of picking up this area. So I think some of the measures, etc., probably are taking time to bed in and come through. So that's why we're seeing that sort of feedback in terms of, I think, the higher percentage in terms of no real sort of effect. But I think if you look at something like the World Economic Forum do a risk review each year, when they looked at 2020, there were elements of environment coming through, but it was very much a blend of different sort of risks that were being identified. But when you get into the longer term view, things like the environment and also the people side are coming through much stronger. So I think we're still sort of finding our way and looking at some of the early sort of planning through the process, which is why the actual effects of this are still sort of coming through at a slower pace at the moment. And that's where I think engagement needs to be driven forward in terms of that planning process and just understanding how we're going to make sure we're going to move this area forward at the appropriate pace to make sure we're covering all of the key areas. And I think, again, going back to what I said earlier on, there's a bit of confusion around having a number of standards, having a number of frameworks, having a number of areas of rating. So again, I think there's a bit of confusion in terms of how all these things interlink and how do we make sure that we're focused on the right information, we're creating the right key performance indicators that we're going to track, and make sure that we've got a good eye on the ball in terms of how these areas are coming together. And I think, to be fair, I think a lot of the regulatory areas are actually consolidating and are coming together in terms of how this area is going to play out going forward.
Thank you, Louis. And before we go on to our poll question, to keep our audience active and engaged, we've had some really insightful questions on registering again, and actually it leads me nicely on to one question that we asked from a participant, was how best to measure and report ESG performance, and also how can we work with it without it becoming worthless? And obviously data and time, how is it that we can make sure that what we're reporting on is accurate and timely and we can use it to the right effect? Banda, I mean, obviously dealing in large organizations globally, that must be a continual challenge for you and the team.
Yeah, I give a couple of examples, and just to pick up a little bit on what Louis just said about the type of committees that you need. So at Yorkshire Water, we have 5 committees. You would expect us to have nominations and audit. We have safety, or health and safety, but we also have a public value committee and a people and remuneration committee. And across those, we encompass ESG, but it's what's right for your organisation. And I do think it's good to take a step back and say, what do we need? Where should our focus be? So that was just an example. So I think there are a number of ways to do this, but mainly you have to look at your own strategy, look at the things that you have to do, things that are mandated, and then work out your own key metrics and then report against the metrics. It has to have some hard data that underpins it. Now, we know what type of information the rating agencies are going to look for. I mean, I'd encourage everyone to have a look at what MSCI list under the 3 pillars of ESG, because it's really interesting. The same with Sustainalytics. There's a lot of crossover, but there are a few differences. But we know what we're going to be judged on, but we still want to do the right thing for our organisation to deliver our strategy. And if we've done our strategy properly, ESG should be a part of that. So we want hard metrics, because if we're going to tag executive pay to it, which increasingly we are doing, to 10 up to 20% in some cases. So what are the hard metrics that the board can rely on to make sure we're making progress in key areas? So we've taken quite a hard line at Marshalls. We've got a 2030 net zero commitment. So we've done a straight line from 2030, and we started in 2020, and we've said, what do we need to do each year to achieve that? And we've tagged our executive pay to it. Now, we've been doing sustainability ESG for a long time. We're on our 2nd round of SBTI targets. So, you know, we are in a good place to do that. And I wouldn't say it's the right thing for every organisation, but I do think the key point for me is hard metrics that everyone believes in, underpinned by evidence. That's the evidence you will use for your ratings agency. That's what the organisation will be aware of, because you're going to be transparent, and that's what your executives will get judged on. So for me, hard metrics.
Thanks, Vanda. Rob, be great to hear your view, just from a cross-sector perspective.
Yeah, well, I would agree that the metrics need to be appropriate for your organisation. So I think there isn't a kind of a one-size-fits-all approach. I would say, so I'll use the example of Blanco, which is a technology company. So we have a very positive impact on our customers' e-credentials. So one of the things that we actually have set up is, and this is kind of describing ESG more as an opportunity rather than an obligation, is a dashboard which we provide to our customers. So it enables them to look at particularly at the impact of using our software, and the software kind of extends the life of any digitally based storage device, be it a server through to a smartphone. And we found this a really strong way of kind of turning this element of reporting into a real positive, and it's something that is our stakeholders, particularly our shareholders, are able to they absolutely get, and it's helped us with our investor narrative, because we're seen as a real kind of promoter of ESG. I would also say that you have to be. We've been quite prudent in terms of not jumping in too early in terms of making, because we wanted to make sure that we were tracking the right metrics before we locked ourselves in too far. So we, having said that, we were early adopters. So of essentially the TCFD reporting. So as an AIM-listed company, we didn't need to report, but we said that actually we should, because it was the right thing to do. What I have observed, and I should say we've just published, I think it's the third standalone ESG report for the company. What we're going to do this year is undertake a survey of stakeholders to understand is it giving them what they want, because what I have observed is we've now locked ourselves into an expectation that what we provided last year is going to be replicated the next year, and as things happen, these things tend to grow, not shrink. So we're going to undertake a sense check with our key stakeholders to see what the scope, how it's being received. We have anecdotal evidence, but we're going to do it in a more systematic way, so that we can just make sure that we're putting our efforts where our stakeholders would expect.
Fantastic, thank you. And Louis, it's a very interesting point just around that production of data and reporting, and is it relevant to stakeholders, investors, shareholders, and boards and exec teams? What are you seeing from your side?
Yeah, I think it is, and I think trouble is, as I said earlier on, just navigating that position has been quite tricky. I would point people to 2 or 3 things that have come out very recently. We do some work with Chapter Zero, which do a lot of really good work around supporting boards and NEDs in terms of the environmental piece. And in August, they produced a link through which was called Navigating the Climate Disclosure Landscape. And it goes through all the key elements with links to the documentation that you need to have a look at, in looking at the NED response, looking at how you can understand the disclosure, how you can look at the targets, what are the mandatory reporting requirements at each level. So I'd recommend as a good sense check, you can just go through and check all the sort of the key elements in terms of what you need to pick up on. And also just pointing you to another document that came out just this week from the FRC Reporting Lab, if you haven't seen it, which talks about 3 elements of net zero disclosures in terms of giving a bank of examples of what they see to be best practice in terms of a range of disclosures that have been made in this area, demonstrating a real understanding of what's required in terms of that planning mechanism as well. And they've picked out 3 elements that investors are looking for in terms of understanding the disclosures. They want to know the commitment of the organization. What's the ambition? What's the scope and the nature of the timing of that commitment? What's the impact in terms of impact on the strategy and the business model? including the assumptions that you've used, the uncertainties, the risk and opportunities areas that you've highlighted. And then picking up thirdly on the performance that's being measured and looking at that and breaking it down between the short, medium and long-term performance. And again, I think it's important just to have a look at how that's laid out in terms of the data and information that you need to gather and how you can pull that information to communicate to your broader stakeholders and other interested parties. And I think just to summarize, I think you need to really set out your own story in this area, and it needs to link into your purpose and your understanding of what your stakeholders are looking for in terms of a broader understanding of what you're doing. So you need to have a clear purpose statement you work from. You need to understand the materiality of this area as well. So what does it actually mean for you in terms of the size of the exercise and the elements that you're picking up and bringing together? I think you also need to be aware of what others are saying about you as well in terms of taking a positive step in terms of the narrative that's developing, particularly as a listed company. You do need to understand that communication process and be proactive rather than reactive to things that maybe people are picking up about you. You need to understand the data, what you have and what you need, and how you then pull that information together to make a meaningful view or present a meaningful view as to where you are and where you're going, and just to take control of the overall process itself. So I think if you can demonstrate that and you really provide your stakeholders with confidence that you're actually dealing with this responsibly and making sure that putting out the right messages, then you're creating that sort of trust that you're dealing with these things appropriately.
Brilliant. Thank you, Louis. Rob.
I was just going to pick up on a point you just mentioned, Louis. So you mentioned Chapter Zero. So I'm a fellow of Chapter Zero, and it's an organisation that exists. It's free to join. It exists to support non-executive directors. So I would encourage anybody on this call who's not signed up to sign up. So, and one of the things that they provide is a toolkit for boards to, I think somebody just asked a question, you know, how do you start your ESG journey? And well, to me, it's all about, well, how do you start to have the right conversations kind of within the organization? So if you haven't done so, I think you provide some good guidance off the Chapter Zero website. Thanks.
Brilliant. Thank you. So very keen to get your involvement, and I'd like to now go on to a poll question. So just coming up on the screen, and all you have to do is the first one we're going to look at is what is, we talked a lot about measuring, but what is auditable, and are we being overloaded by reporting? So do make a choice, and we will give you about 5 seconds worth, and then the results should come up on the screen. Great. So interesting set of data around measuring and auditing. Overloading by reporting is coming out very strongly as agree, and strongly agree, and disagree 30%. We have touched on this around the relevance, accuracy, utilising it. But Banda, just kicking off with you, just from a manpower perspective and making sure we are focusing on leading the business, running the business, as well as reporting. It'd be great to get your insight.
No, I do agree that there's a lot of information to pull together from various sources in the organisation, and I do think it is a burden on smaller organisations. The information that needs to come from the HR team, there's information from health and safety, there's information perhaps from, if you have a sustainability person or environmental person, it all needs to come together and be made into a whole that makes sense for your organisation, that feeds into the reporting cycle. So in larger organisations, there are dedicated people and teams now, and it is a growing area. and people are choosing careers in sustainability. So I think it's going to grow. You know, it is harder for smaller organisations. It always is with whatever area you look at. So I think the point earlier about being focused on what your strategy is, the role of ESG within that, or you know, sustainable long-term growth. What does that look like for your organisation? What are the information that you need, mandatory and otherwise, and create something that works for your organisation that will drive it forward. You don't need to measure absolutely everything. There are some things you do need to report on and others you want to report on because it's right for you. So yeah, that would be my approach. It would be pragmatic, but certainly for larger corporates and for quoted companies, we have no choice. We need to put that team together because it can be a burden. You've got to get on the front foot and make sure you're providing the information that's needed for, you know, regulation and for your own organisation.
Thank you. And just to touch on 2 points there, we've seen a rise in roles such as head of sustainability, head of ESG, head of ESG reporting. They are very prominent within a central function in businesses of varying scales and varying domesticity as well, interestingly. And I suppose to touch on the SME side and private equity invested businesses, Eton Bridge was invested by Elysian Capital 14 months ago. And as part of that journey, we are now being assessed and supported around our ESG agenda. And it has been a very interesting journey for us, being privately owned previously and very much an SME, to be able to work with the investors and work with them in terms of their credentials as to what works for us in terms of our ESG agenda, but also how can they report effectively. So from an Eton Bridge perspective, organisationally, we are on that journey at the moment, and it is a fascinating one, and we are learning and creating a better structure for the organisation across all of the facets, both perhaps not so much on the E, but certainly on the S and the G, very much so. Our governance has increased, our social agenda is very prominent now, and it's been a great journey for us. Rob, it'd be great just to hear a quick insight in terms of auditable versus overloading, and maybe perhaps touching on OneWeb.
Yeah, and I think just picking up on the previous point as well. I mean, I have huge sympathy because I think this whole topic is it's been a bit of we've created a kind of a bit of an alphabet soup, and for small organisations, I mean, it's really tricky. And I guess you've also seen the kind of the rise of an advisory network kind of, you know, very quickly, and you have to be, I think you have to be particularly careful, else you could end up kind of just investing not just time, but a lot of money as well. So I think, you know, just be careful kind of what you wish for and kind of do it for the right reasons, would be my take. So I'm on the board of a satellite business which is called OneWeb, which is clearly involved in the space sector. So it's a private company. The UK government is one of the shareholders. The main shareholder is a large Indian conglomerate called Bharti, but we also have private equity investors and different nationalities kind of represented right around the boardroom. So there is no. It's quite interesting because there's no real obligation for such organisations to be producing an ESG report, but we as a board kind of have the discussion, and you know, I would say led by the chief executive, kind of, you know, he believed that it is the right thing to do, and I think he also sees that there is an opportunity to kind of position OneWeb as kind of an particularly environmentally kind of conscious space provider. And the bottom line is nobody's really tried to do that, and all you hear of the really negative environmental impacts of the industry. So kind of OneWeb, as kind of well as doing lots of other things, is trying to incorporate kind of this this topic in a front foot, way, which I think for me has been, well, it's the right thing to do. And so we're picking up for, I would say, kind of it's the right thing to do, but there's also going to be a kind of a reputational positive. I think that I was interested to see, I think it was a Deloitte survey of CFOs, which was published just very recently. And I think that said, and it was around the topic of ESG, the key reason that CFOs were supporting the ESG movement was to enhance the reputation of their organization. That came out at kind of the top of the poll, which I think that's quite that represents quite a shift. I think, because that wouldn't have been, I don't think that would have been the same answer if the question had been asked, even just a year ago.
Thank you. And Louis, your insight just in terms of the from an auditing perspective, what are we then doing? Where is that data going? And what are going to be the next steps in terms of regulation? You're at the forefront of that, the regulation side.
I think it goes back to the data that you're collecting and how you need to make sure that you're mindful of what information you need to collect and how you collect that in terms of the consistency of information and making sure that that information is able to be reviewed in some shape or form. I think from an assurance perspective, the regulator is actually gearing up to get more comfort from organisations in terms of their audit and assurance activities. So for the larger companies in particular, there's going to be more of a focus on that area going forward. So that will entail explaining the assurance mechanisms and making sure that these areas are actually reviewed and are evidence-based, as was explained earlier on. I think that just then calls into question who is going to do that, because this is over and a bit beyond your sort of normal, probably auditor experience. So again, we'll probably be requiring some specialist input in terms of how you look at the data and look at the information to make sure that it can be supported appropriately. And I think going back to what we said earlier on, there was a survey that came out just this week from the Quoted Companies Alliance asking the question about external service providers, and 60% of the population, which I think was 60 smaller listed and growth companies, 60% of the population was saying that they were obtaining external advice in terms of data collection and data reporting. So I think people are looking at their resources. That was one of the 5 R's that I pointed out at the beginning. I think people are looking at the balance of internal versus external resources that are required. And also, I think people are looking at from the risk perspective. They're looking to do more assurance mapping against the risk. So where are the risks within the organization, which we picked up on the ESG reporting area, and who is best placed to give us assurance that we've managed that risk and controlled that risk. And I think that mapping process is coming more into play in terms of boards thinking this through and saying, okay, well, who is the best assurance provider? And there's an element that we need to cover both internally. So if we have an internal function, we need to make sure we've got the right skills to undertake this area in particular. But also, when do we need to perhaps call in some external help? And I think, as Rob said earlier on, I think we just need to be careful with how that sort of plays out in terms of getting the right balance of investment and not getting perhaps too carried away, but really understand what our needs are in that area in particular.
Thank you. And we've had some really interesting questions coming in on the Q&A box, and just keen just to touch on one of them, just focusing on my comment around increasing head of sustainability roles. Do the panel believe that it's the right strategy to have a head of sustainability, and surely this should be interweaved as part of the ESG agenda across each pillar of the strategy? Should it be a standalone? Because we don't have a head of social or head of governance. I mean, that would sit in certain places. So, Vanda, your thoughts on that sort of making a sustainability one of the key verticals and a pivot point as a job title?
I think it's a really good question, but I would say they're not mutually exclusive. I do think it needs to be integrated in the organisation, but someone does need to pull it together. Someone does need to work with the senior leadership team and agree that we're going for science-based targets in this area and get everything together to make sure that information is disseminated. So I see it more as a conductor of the orchestra rather than the person who does everything, because absolutely I agree with the question that it needs to be integrated into the organisation, and various individuals are responsible for various parts of it, but it does need to be pulled together. So I would say, particularly in larger organisations, a head of sustainability fulfills that role, and it is needed.
Yeah, thank you. And I know, Rob, you know, in your narrative, you've been very focused on that, the cost element of it, and that investment scale, and obviously creating roles to deliver on an ESG agenda. Is that commercially viable for certainly smaller and private equity backed businesses particularly?
Yeah, I think I have sympathy with what I think it's Andy Cox has raised this question. So I have sympathy with where you're coming from. So certainly in the organisations I'm involved in, we don't have head of sustainability, so it isn't a role. But what we do have is we're very clear where the responsibility sits within the executive. So how they fulfil that is kind of, you know, it's largely a kind of an executive matter, but the way that they do it in smaller organizations is it tends to be distributed with the component elements of E, S, and G. Well, that would imply there are 3 people. It's actually way broader than that. So they kind of they act as the orchestrator as opposed to having a dedicated individual, and I think for smaller organizations that can work well.
Great, thank you. I'm mindful of time, and I'm very keen to touch on, I kindly asked you to talk about, you know, your key insights from a market perspective, and based on our discussion around investment and the recent, you know, economic and market challenges, I'd be keen as we close off to go around the screen, and Vanda, to get your thoughts. Obviously, it's been a challenging, from a market perspective, a very challenging couple of weeks, and we talked about, you know, investors checking against businesses around greenwashing and all those elements. It'd be great just to get your sense from your perspective in the FTSE 100 environment, what the future holds for us.
Well, first and foremost, we're going to carry on doing the right thing. So we're not going to ditch our ESG strategy because the share price might have taken a hit. We will carry on. We are doing the right things because they're the right things for us and, you know, hopefully all our stakeholders, and it will drive long-term growth. There is a dichotomy, particularly in the UK, between the compliance team and the fund managers, and they don't always agree, in my opinion. That's a personal view. There has to be a belief that the fund managers will invest in those companies that are doing the right things in ESG. At the moment, we're expected to do the right things, but are they really differentiating between the businesses that are investing in that? It's part of their investment decision, but it's not, in my experience, at the top of their agenda yet. I think it will get there. So we're going to carry on doing the right things, that's first and foremost, but it does get harder to invest in, let me give you an example, new product development, trying to take carbon out of our products to reduce the amount of concrete, the amount of cement in our concrete products. We've reduced it by 50%, we wanted to get it to 0. That all takes a lot of investment money at a time when there are lots of other things that we need to be doing. So there are certain things that we might have to pull back on just for a short time because there are lots of other things that we need to do right now. So I do think it puts the ESG sort of, I'm going to say sector, because it's an institution all of its own. It puts ESG under the spotlight and does make it slightly harder, unless we see our own investors really prioritising it and saying, this is really important to us. I'm going to prioritise the companies that are doing the right things. And I'm not sure we're quite there yet. I wish we were.
Thank you. Rob.
I think I'd reiterate a point maybe I made right at the beginning, which is that I do observe that there are key differences between kind of the mood in particularly in North America versus the mood in Europe. And I think the current economic situation is kind of is exaggerating that in my experience. However, having said that, on Blanco, we have our second largest shareholder is a US West Coast fund who only invests in, they are an ESG investor. So they'll only invest in organizations where they believe there is a very strong ESG story. So it is quite interesting having them on board. And I'm absolutely delighted that they are, because they will ensure that, using Vanda's phrase, that we will continue to do the right thing. So it's rather useful to have somebody in the US who is such a powerful advocate for ESG. And I'll just end with an example of what we're doing, something that we're doing within Ubiquity, the marketing services business. So I think a lot of people, I think there've been a couple of questions in the chat, have said, how do we make sure that if you're operating a service business, the ESG is relevant? Well, and one of the lenses we're looking at is the kind of, it's a marketing services business. We're going to launch a carbon index. So for those of you familiar with the advertising world, advertising is sold in CPMs, cost per thousand. So we're going to be launching a CO2 PM for the sector, so enabling advertisers to kind of measure their scope 3 or part of their scope 3 impact. So that's, we're kind of trying to, we're embracing it, bringing it to life, and helping our clients to measure the impact that they are having.
Brilliant, thank you. And finally, to you, Louis, it'd be great to hear your insight as a closing remarks.
I was struck by a headline I read this week. It said executives are backing away from ESG as recession risks mount, which is, I think, what we're saying in this area, that people are saying, we need to deal with the current risks, and we need to really focus on surviving and looking at our viability in certain areas. So interesting, that sort of dynamic is coming into play. And I think some of that also has been reflected in what's been said in the US in particular. But I think it's also making sure that we can consider how the three elements work together, because I think governance is really looking at how a company is well led and well owned. We've obviously got the S, which is the positive social sort of impact, and E, the climate and biodiversity impact. And I think the question that we're asking is at board level, have we got the right people sitting around the table in terms of the competencies and the capabilities of the board, and particularly the NED community? So is this going to lead to a change in the NED in terms of a new breed of NED sort of coming through to the fore? Probably a younger NED in terms of understanding a lot of the environmental and other sort of cultural aspects that organisations are now trying to navigate. And I think with NEDs generally, it's probably asking the question, where are my gaps in my knowledge? Where are the gaps in my skill base? Where are the gaps in the attributes that I perhaps need to bring to the board? So I think it could lead to a bit of a shake-up in terms of the constitution of the board and the drive to bring greater diversity into the boardroom. And also the chair role. The chair is the leader of the board, and they really need to be up to speed with a lot of this area, and to be able to make sure that the board is on the right track, to challenge the executives and to positively look at this area and make sure that they've got the right plans in place, and they're able to pull all these strands together, because I think it's quite a complex web that we've been discussing today in terms of all the key elements that come together in this ESG area.
Louis, thank you. It's been a fascinating hour. Thank you very much for joining me again. Thank you to our participants out there. Great to see you. Do join us again. We have another webinar coming up in November, talking about the economic current market and the political market. Until then, thank you. Thank you, Vanda. Thank you, Rob and Louis, and keep safe. Thank you.